Tuesday, July 25th, 2017, Monaco 64, home of alternative economics and contrarian views. First of all, I'd like to mention that I did an interview with the Maestro Way, Brian. He runs that YouTube channel. I'll put a link below to that video, and I'll put it up in the card as well. I did the interview yesterday. I think you guys probably enjoy listening to it. The Maestro Way has a really good YouTube channel. He interviews quite a few people in the alternative space, economics and market space. He's also a chartist, technical analyst. So yeah, I recommend that. And now let's go on to a little update on the markets. It's a little later today. It's 12:30 p.m. London, so it's about 7:30 a.m. Eastern Standard Time in the U.S. I'd like to talk also about wealth transfer after I do this update. But first of all, let's go straight to the markets. Spot gold down slightly this morning. We're at $12.50.70, down about $4.40, the spot price, or 1/3%. Silver is down 18 cents at $16.30, or down 1%. And what we're seeing the currencies today, we continue to see the pound strengthen a bit against the dollar. We're at 130.40, up 12 pips. The euro's also up about 13 pips at 116.55. So you'd think, you know, with the pound and the euro being strong and the dollar being weaker, that gold would be doing well. But actually, the dollar is up against the yen. And as I've said many times before, dollar strength against the yen usually means dollar strength against the price of gold. So dollar yen is 111.43, up 33 pips, or 1/3%. So that's what, in my opinion, is making the difference in gold and silver. That's why they've come off. The high overnight has been 12.58 for gold, and the low 12.49. Silver 16.55 high, 16.24 low. Personally, I still think we are in a move higher here for gold since we traded down to 12.05. In my opinion, this is just a little consolidation. The same thing for the dollar against the yen. I think the dollar is moving lower in the short term against the yen, and this is just a technical bounce. What else? Stock market, the Dow is up 85 points, or 0.4%. at 21,618. Dow futures, S&P futures 2476, up 5.5 points, or 0.2%. Also the FTSE in the UK, I think we're down quite a bit yesterday, about 1%, and today we're up 1.25% at 7450. So those are the markets generally speaking. Cryptocurrencies, I think they've come off a little bit here in the last few hours. Notice that Bitcoin is down quite a bit. Let's have a look here. Bitcoin 25.57, so down 7% from the 24-hour high of 27.73. So we're right near the lows of the last 24 hours. Ethereum 203 from a high of 226 last 24 hours. And not surprisingly, Steam has come off on that. We're at 120, so quite a lot of volatility. Steam was up at 160 yesterday, and like 165 maybe the day before, and we're now at 120. Continued volatility to be expected there. Headlines here. Zero Hedge is saying this morning before the official open in the market, it says S&P futures bounce as VIX hammered, Europe euphoric. So European stocks have also rebounded after 3 days of declines. And it's interesting, this VIX being hammered, which is a measure of volatility. And I was talking to Brian, or the Maestro, yesterday. And there's an article on Zero Hedge about a big trader who took a huge position in options, betting that the stock market would drop significantly by October. And what this trader did, he sold VIX puts, which means he's selling. If the VIX goes down, he actually is in danger of losing money. So he's betting that the VIX will not go down. So he sold puts, and then he bought a call, and then he sold 2 other calls of a higher strike. So that he bought a 1/2 call spread by selling the puts, and this trader basically did this for flat, which means he got the same amount of credit he got for selling the puts, he paid for the 1/2 call spread. It's an interesting trade, but it doesn't mean that this guy or this girl knows what's going to happen by October. It's just a punt. And as you can see here this morning, VIX has been hammered. So maybe his 1/2 call spread versus selling a put is actually lost some value, and this trader might be underwater a little bit here this morning. Well, I don't know, but just wanted to mention that. And I spoke earlier about wealth transfer when I started the video. There is a lot of talk in the alternative media about how there's going to be a great transfer of wealth in the next crisis. I partially agree with that, but I also think there's been a great wealth transfer in the last 8 years. And why do I say that? Well, mainly because Wall Street and the big corporations indirectly, the financial sector, they were bailed out basically by the public, the taxpayer here in the UK, in the US, in Europe, in Greece. Bailed out by the taxpayer, and these people are benefiting greatly from that. I warned back in 2008, I think. I used to have a blog back then, and I wrote something saying, if the U.S. Congress approves the bailout or TARP, which was $700 billion, it would be the worst thing that they could do, because it would show that the markets and the financial sector and the big corporations, that the government has their back, and it would create even more irresponsibility. And that's what we're seeing, in my opinion. And how is the wealth being transferred? Well, here in the UK, for example, the wealth has been transferred because we've had to take so much debt as a nation, and the government did this on the back of the taxpayer to bail out the banks, bail out the financial sector, bail out the big corporations. Why do I say the big corporations? Well, because they've kept rates at 0, they've punished savers, but the big corporations have been borrowing very easily in the financial markets, buying back their stock, and just, exercising their options and making, a fortune. And what's the other side of the coin? The other side of the coin is that to carry all this debt that's been put on the public in the UK and also in the US and all other places, all other countries in Western Europe, the UK's had to devalue its currency. We were in 2007, before the crisis, £1 would buy $2. Now we can only buy $1.30. So that will translate, and is already translating, into a higher cost of living for the general public who do not have assets that, financial assets that with which they can protect themselves. They do not have access to easy borrowing like the banks and corporations do. We can't call the bank and say, "Oh, I want to borrow LIBOR, 3-month LIBOR for 1%." 3-month sterling LIBOR for 1%, because I want to buy this house and flip it, next week. We can't do that. There's, financial elite, the big corporations, they can use this policy that was used to save themselves by the government and the central bank. They can use that for financial engineering. But the flip side, of course, is a lower currency, a debased currency, in order to be able to carry this massive debt that keeps accumulating. And it's going to get worse. Cost of living is going to keep going up. I just want to give an example today. I went to the little shop down the road, and I was looking at some of the products, and there's a small bag of rice, and one of the rows, it was the same brand, was on the left, for example, it was 75p for this small bag of rice. And then the second row already, the same amount of rice, same brand, same bag, was up to 89p. So I assume that, they've had a new delivery and now it's 89p, and the previous delivery was 75. So you say it's only a 14p increase in the bag of rice, but percentage-wise, that's 18%. So that's what we're seeing. The transfer of wealth is already happening, and I think that's the same kind of thing that happened after the war, World War II. The pound was devalued several times in the 50s and 60s, and then in the 70s, things started picking up. The cost of living rose. We had 20% inflation here in the UK. And is it going to take another 10 years of financial repression, low rates, QE, to bring about the rising cost of living like in the 70s? I don't think so. I think it's not going to take as long, and we're already in it. So as per people with more wealth, I'm talking here more about the general public and the cost of living, which hurts a lot more the people at the bottom and in the middle. What about the people further up, highly paid professionals? Well, I think they might get hurt as well if we see a complete collapse of the financial system. A lot of these people have pensions, and pensions, they're very, how can I say, pension funds and pension programs, they're kind of regulated and made to invest in stocks, bonds, equities, bonds, not much else. So when things do kind of turn around in the asset, or paper world or financial assets, those people will get hurt. So there will be a transfer of wealth there. The people that won't get hurt are the very, very top people who can afford to go through the ups and downs. So yeah, if you enjoyed the video, please like, share, subscribe to my channel if you haven't yet, and follow me on steemit.com as well. STEEMIT.com, and make sure you listen to my interview with the Maestro Way, and I'll talk to you later. Bye.